fathers here sitting out in the audience, and Chris, I'm just going to bring you up and let you do your thing.
Sure.
First one is class number.
Thank you, Lane, I appreciate that introduction. And I didn't give him much to go on because I was asked, "What are you going to talk about?" And I said, "Well, what do you want me to talk about?" So I appreciate the invite to come out here and really all the stuff that I feel like the A&M Club's doing these days. I mean, what a phenomenal thing Coaches Night was. And as someone that hasn't been as involved, I'm excited to get more involved just because it seems like there's kind of a new approach. It's the same great events, but just with a very, really neat, cohesive strategy. So, I'm going to be pretty brief, and then of course I'll open up for some questions and answers if you're interested. One of the things I feel like, these are great opportunities for the folks that can't make Monday lunches. And I don't want to steal the thunder of next Monday's lunch. I want to encourage you to attend that because I saw the topic and I'm going to try to go. It's on planned giving. And I know a lot of what this club has stood for since, 1912 that it's been around? 1921. Is giving back to the community, in particular a lot of scholarships. And I can remember coming here as a little kid and just seeing the corps be here and the band, and a lot of those students were beneficiaries of what this club was able to do. And it's my understanding that a lot of that philanthropic giving really has been done more on a case by case is the right way. Just more of a specific fundraiser. We have a barbecue and it raises, or we have Coaches Night and it raises. But under the guidance of the board of directors, I think they want to continue that, but really focus on, what if this club, who's had so much impact on San Antonio, can we have more impact? Can we help more students? Can we, influence more, what's going on in San Antonio? I mean, one of the things I'm proud to be an Aggie, but part of that to me means responsibility and being a leader. And so I'm not going to steal the thunder of Monday and being the planned giving, but I am going to talk a little bit about some ideas in terms of, philanthropic giving, and just a few things about what the club's doing in terms, to encourage you to consider that. So a little background on myself, as Lane mentioned, I'm a third generation Aggie, class of '99. If you go to my office, you're not allowed to wear orange. And I say that not jokingly. I'm also a third generation CPA. And so my grandfather was kind of, had a relationship with the A&M Club. It helped the nonprofit kicked off. My dad's been involved throughout the years. And our firm, which was Williams Pro Mass, now it's Williams Steiner Mass, has had the privilege of, preparing the tax compliance for the A&M Club for quite some time. And so what that means is basically we file a tax return for a nonprofit. I don't want to, make it like black magic. A nonprofit tax return is not too difficult. You're not paying tax because you're a nonprofit. But one of the things I think that, and it's a credit to the leadership of the club and the board of directors. Recently, Angel reached out to us and said, the board of directors really feels like we want to step up the game. And we've got good accounting, but we also want to really open up the books and be completely transparent with the club about what we're doing, where the money is going, and just really encourage questions. And we would appreciate it if, they asked our firm, would you guys get a little bit more involved on a monthly basis? Just as a CPA firm to kind of be looking over the shoulder. I mean, there's nothing, if anything, I find that that's a best practice if you're trying to raise funds. You just want to say, hey, we're not hiding anything. You want to know where every dollar goes. So recently, we're privileged to say that, we're helping out the club a little bit more on a monthly basis with oversight. And so I think the board of directors, I commend them that they're committed to complete transparency and really upping the game. I mean, not only does that should encourage you to consider giving funds, because I know when I write a check to whether it's my church or whether it's the Rotary Club or one of those things, I want to make sure it's going to the places that I want to go. And so now but it also allows a lot of times nonprofits, and I don't know if the A&M Club would qualify for this, but to apply for grants and other outside sources of funding. So big shout out to the board of directors for doing that. So I think that's part of the message Angel wanted to share, just kind of the exciting news that we're going to be able to.
Just interject is that We have staff that helps, but we had a new treasurer every year. When I was doing it, I have no financial background, I'm an engineer. And so a benefit for us in doing that is to allow non-financial people to help run things, and don't you guys do it for us, and it's just more of a timer thing. We've got to show our members what we're using with our money. And having true professionals do all that for us instead of us making goofy, stupid decisions and having to do it afterwards, we chose to spend a little more and go a professional route, so we have a much cleaner, easier way to do our finances every month and look at our whole budget more holistically, because we want to do more with our money. If we can be smart with it, that's why we wanted to ask you guys to do more for us, because you're professionals, and I'm not the guy you want running expensive. At home, my wife does it.
Well, no, we appreciate that, and I think that's well said, you know. And so, you know, wanted to share that with the group, and again, I don't want to steal the thunder from Monday, but I know they've got some exciting things planned of why transparency is really important. You know, so actually, I'm gonna kind of, I don't really have an order here, I'm just kind of ramble on, but I, you know, kind of get into that. One of the things to kind of get in, and this is maybe more of an educational talk than, you know, about the club and things, and if I misspeak, please correct me. But in the past, most of the gifts that have been given to the club have really been somewhat restricted. You know, they're just for scholarships, which is fantastic. I mean, there's so many kids in Bexar County that have benefited and now have an Aggie ring because of what this club's done. But I think with a vision of doing more and having a bigger impact on the community, yes, sending students from Bexar County to Texas A&M is important, but could we do more? And I won't limit what that looks like. But in order to do that, sometimes gifts need to be unrestricted, and they need to be flexible so they can have more impact in certain areas. And so I don't think the board of directors, I think in their wisdom said, you know, we're not just gonna ask you to write us a check and not tell you where it's going. We want you to have confidence that if you make the decision, okay, I wanna donate $10 a month to the A&M club outside of my dues, or 100, or just, you know, once a year, and more of a, what I'll call planned giving strategy, which I didn't invent that term. That's, I think, the topic of Monday's lunch, and so that I think you'll get more details of what that can look like. But I think it's really awesome to see that the club didn't get the cart before the horse. They didn't ask you like, oh, you know, consider giving unrestricted, and we'll figure out how to account for it later on. And so again, I commend the board and just appreciate the opportunity that we can help produce that accountability, transparency to the group. As members of this club, or even people that are just Aggies in San Antonio, want to not only, you know, donate, like when we write our check to the 12th man, I know that's to help get our football season tickets, or the Association of Former Students goes to a certain direction. So I think this club trying to raise funds are not trying to discourage you from contributing to those other things. This is not a or, this is an and the and really has local impact. And I feel like aren't we the only club probably in the state or the world that has its own facility that can...
We are the only club that has our own facility, yes.
Yeah, and what a fantastic facility, you know, and no shade on what it looked like maybe 10 years ago, but it's a huge upgrade, and I go to, you know, private events here, and so that's another revenue source that I think in the wisdom of the club, they've had a lot of foresight and looking forward. So, you know, just wanted to share that, you know, bit of news with y'all. And then, you know, also this is maybe a little bit more on the tax side of things. I'll put on my CPA hat for a minute and take off my accountant hat. And, you know, and you could hear this speech if I was talking to my church or if I was talking to our Rotary Club. There's a lot of compelling reasons to consider giving from a tax point of view. You know, I am not going to stand up here and say anything political because I'm just going to make one person mad. But one thing I feel pretty safe with saying, whether you like to wear red to work or whether you like to wear blue to work, you probably don't like writing a check to the federal government. You know, I wrote an article for our church one time that said, give to God, not the government. And I think I could substitute, give to the A&M Club of San Antonio, not the government. Well, how could I do that? Well, a couple of really simple ways. And depending on the stage of life you're in and your financial situation, this may or may not apply to you. One thing that, you know, I mean, a lot of folks, whether you're doing it yourself or whether you've employed somebody professionally that you know, The stock market's been pretty good the last, really since '08. And there's a lot of people pretty nervous about what might happen in the fall one way or the other. Well, I don't think you ever got poor taking some profits off the table. But I have people come to my office all the time and say, well, I really don't want to sell that winter because I'm going to have to pay a bunch of tax on it. I say, no, I get it, And so one thing that I've seen a strategy that people do, and typically it's at the end of the year, but it wouldn't have to be, is rather than donating, $100 or let's say it's $1,000 to the A&M Club of San Antonio, what if you donated 10 shares of Apple stock? And if you sold it, you would have to pay tax of, let's call it $200, but instead, the A&M Club gets to take the stock, and as a nonprofit, they can sell it, and they don't have to pay the tax. So you basically transferred that tax money over to the San Antonio A&M Club. To me, that's a win, because I trust what this club's gonna do with the money more than I do where else it would go. Another strategy, and this seems to be a little bit of a younger crowd, this might resonate a little bit more on Monday lunches, because I haven't been to one in a while, but I've got gray hair now, so I used to say that there's a little more gray hair. But at a certain age, if you have retirement accounts, you're required to take a distribution from them. And when that distribution comes out, unless it's through a Roth IRA, you're gonna pay tax on that, at ordinary income rates as well. And so there's a little, caveat in the tax code that says, well, if you direct your required minimum distribution towards a nonprofit, and we're a 501c3, that will satisfy your distribution for the year, so you keep the IRS happy, and you're not going to pay any tax. So, just as a simple example, and I always tell people when I'm meeting with them, maybe y'all won't laugh at this joke. They laugh because not all of them are Aggies. I said, I'm an Aggie, so I got to keep my math real simple. If you made a $1,000 distribution from your IRA and it came to you personally, you might pay $200 worth of tax, and now you have $800, and you give the $800 to the A&M Club of San Antonio. Well, if instead you directed that $1,000 straight to the A&M Club, they get the whole $1,000. Again, who doesn't get 200? Our friends up in Washington. So again, I'm not trying to be political here. I'm just trying to, give you some knowledge so you can direct funds to the places that you're passionate about, whether that be the A&M Club of San Antonio or maybe another nonprofit that you're involved with. And there's other changes in the tax code that have occurred over the last couple of years that I would recommend being more mindful with your giving. I don't want to get too in the weeds here, but as they've increased the standard deduction, a lot of people don't itemize anymore, meaning that there's really not a tax advantage to giving to charities. And I know in 2017 when that was passed, a lot of charities got very scared. So I've seen folks employ a strategy of I'm going to inform the executive director, but rather than giving, or your church or whomever, rather than giving you $10,000 every year, I'm going to give you $20,000 every 2 years. And you're kind of bunching your gifts up, so you're getting more of a tax advantage. I would recommend, if you're going to consider doing that, as a courtesy, maybe let the treasurer or the executive director knows, because they get real nervous when they're like, hey, it's December 31st and I'm not going to hit my annual budget. Well, if you get January 1st, you're going to get a tax benefit. So sometimes there's some timing on those things. So those are some just specific things on charitable giving just to consider. I think when you have an organization that you're passionate about, whether it be the A&M Club, which I know all of you here are, to really be purposeful with your giving. It's great to be able to go to a Monday lunch or something and everybody pass the hat around and we throw a few dollars in here. But I think one of the things as a steward of your dollars, the board of directors and under Angel's leadership is going to try to be really purposeful. And one thing that's helpful to them, if they can kind of budget out, okay, on a planned giving basis, what could we expect every year? Because then in addition to scholarships, what are the things that we can plan to do? And I wasn't aware of this, and again, I don't know enough details other than maybe to kind of be the appetizer of what you'll hear on Monday. But the Mission Maroon is something that the club it's already been launched, but really going to be rolled out over the fall, is that correct? And it's really an exciting thing and a bold way that this club and its leadership is going to encourage giving in a very transparent way, but provides the leadership of the club some flexibility to really have some impact on our community beyond just the scholarships and all the things that they've been doing for many, many years. So don't really have a whole lot more than that. You know, I can tell you what I think the Aggies are going to do in football, but I would just be wrong because I always am. If anybody had any questions, you know, more specific, I'm happy to answer them. I'll tell you if I don't know the answer, I'll tell you that, but I'll get back to you. But just appreciate the opportunity to come up here and share with you a little bit about what the club's doing, and then just some ideas just to, you know, hopefully get some more dollars so we can just influence this great city and through this great club and just do what Aggies do. That's all I got.
I have a question, and Chris, I know how involved you are in the community, both personally and professionally. I was talking with some of the younger guys, actually, the people that I've met just tonight, and we were talking about just ways to utilize the Aggie network and ways to get to know each other and either, you know, find ways to do business or just to build more relationships. So my question to you, how have you either used the Aggie network or any tips you would have for young professionals to get more involved?
Sure, no, and I appreciate that question, and I used to consider myself a young professional. I don't think I am anymore. No, I've really had the privilege to be involved in a lot of things in San Antonio, and sometimes asked to lead. And I give a big credit to my dad and grandfather because, you know, to serve is whenever I joined something, whether it was the Aggie Club or whether it was the Rotary Club or whether it was the Chamber or a leadership program, I kind of always went into it with a mindset of I'm going to serve first and build relationships, and then if networking and business occurs, you know, that's secondary. But I remember my grandfather telling me, you know, when I joined the Rotary Club, don't you dare start passing around your business card. You know, you need to get out there and serve. And so the way I've approached it, and again, this is not the right answer, but just to answer the question, is I try to limit the things that I'm involved in, especially now. But when I go all in. And I go all in with the mindset of I'm going to serve and can contribute with whatever I can bring to the table, you know, with no expectation other than helping the organization. So if that's somebody needs, it's amazing how I always end up being the treasurer of a lot of organizations. I'm sure you find yourself in that thing, but if that's the role I need to play, great. And so over time, I think that's built some relationships where even at a young age, I could call the Lane Mitchells, the Rick Cavenders, and I mean, it wasn't because I was looking for their business, it was just because I had served alongside them and was in these organizations for that reason. And to expand upon that, one of the other things I found that was really impactful, happy hours are great, Monday lunches are great, but where I feel like I've really built a lot of strong relationships is when you actually physically get out there and sweat and serve. So if there's a service day the A&M Club has, or like for Rotary, we built a playground for kids, you know, whatever it is, you know, just to be an active member, and then when possible, when presented with the opportunity, try to serve in a leadership role. And it's amazing when people see you in action and, you know, begin to build a relationship and trust. I mean, you know, again, it's you don't do it with expectation, but it's amazing how, you know, sometimes you build those business relationships and opportunities do present itself. So, you know, I still experimenting with things every day, and by no means have it figured out. And I guess along those lines, just to backtrack a little bit, I try not to join too many things. I think that when I first came back to San Antonio in my 20s, I tried to join a bunch of stuff, and I've learned that I'd rather give my time and effort to a couple of things and do it really, really well than just you know, try to just join every organization in town. So I don't know if that answers the question.
You were talking about the minimum distributions from these accounts. Don't you have to be at a certain age before you start having to?
Correct. So it's only a required minimum distribution. So for years, you had to start taking dollars out of an IRA at 70 and a half. It's now 72 and a half. So if you're 65 and the strategy doesn't work, but once you get to that, because a lot of times what folks will do with their retirement accounts, that's the last bucket they want to touch because it can compound tax deferred. So they're using other monies, and then when they get to that age, they say, oh my gosh, I've got, maybe in some situations they have more money than they're going to use on an annual basis, and so it's only something that works, and it's only up to, I say only, it's up to the first 100,000. So if your IRA was worth $10 million, you're still going to have a taxable event. But I'm sure you could turn around and take that money even if you had to pay tax and donate it to the A&M Club, and they probably appreciate it.
Oh, yeah, absolutely, absolutely.
Could you mention something in your will to do something with the retirement so that, your person that's going to inherit that is under 65 maybe, or under 55, and if they get the money, they're going to pay the income tax, and so you can further plan that out if you
Well, in your case, no, I would discourage that. I would encourage you to give it to your granddaughters, but that's my dad. If she goes to A&M especially, then you could have a personal scholarship. So, no, Dad, that's a great point to bring up. From an estate planning point of view, a lot of times, and the rules are set to change. I mean, right now, if someone passes away, everyone hears about the death tax, okay. I can tell you one way, no matter what the rules change to. Right now, if you're married, you've got $25 million worth of shelter, but if your estate's above that, get ready to write a check to the government. In 2025, those rules change, and they drop back down, and they're still pretty generous, but if you want a bulletproof way to not pay estate tax, name a charity in your will, and it's very simple to do that. You just name, okay, I want $25,000 or $100,000 to go to the A&M Club of San Antonio, and it's something that just as you develop your estate plan, just something to consider if you have a passion for something. That also, it's, again, I should have prepared better, but it leads me to think of another strategy that this is more just on charitable giving in general, and again, I'm sure the executive director and the board would rather have all those funds at one time, but another strategy that I've seen people do, I've had a couple of clients that have had very, very large liquidity events, and to the tune of 8 or 9, probably 8, sometimes 9 figures, and at the very end of the year, and so they're like, oh my gosh, I'm going to have to pay a huge tax bill, and they want to give to more than one organization, but they really don't have time to write the checks. Another vehicle that a lot of people will use is what's called a donor-advised fund. And so what a donor-advised fund does, you can go down, if you've got a relationship with a financial professional, they can probably open one up, but I know like Schwab or Fidelity, you don't have to pay too much. What a donor-advised fund is it's a special type of vehicle where I could write a check. Let's say it's the end of the year, and I just had this I just sold my company, and I'd love to get $1 million tax write-off. But I don't have time to write checks to all these different organizations, including the San Antonio A&M Club. Now, I could go write that check to Angel, and he'd be very excited, but I'm thinking, maybe I want to spread it around a little bit. Well, to buy myself some time, I can write a check into a donor-advised fund. It goes into a fund. I get the full tax write-off for the $1 million. Then that fund basically becomes like your own little endowment, like a private foundation for your family, without all the paperwork that a foundation. I mean, at some point, if you were worth enough, higher net worth, you could go through you could establish a family foundation and some of those things, but those are very complex. But in a donor-advised fund, then every year, now this $1 million is in this Fidelity account. You could invest it, you could do, you could hold it in cash, but then out of that fund, you get the tax write-off in the year that you contributed it to that fund. But then going forward, you said, well, for budgeting purposes, I'm going to write a check for $100,000 every year to the A&M Club of San Antonio. And so once a year, I write that check out of the fund. And granted, I get the tax deduction up front in the year that I really needed it because I had this big income event. But then in the future, I can spread out my donations. I can give it to different people. And all the while the funds are in there, they could grow. You could invest them. You kind of treat it like a foundation, per se, just for yourself. So that's something that I've seen some people use. And that's not specifically encouraging you to donate here, but just a tax strategy to maybe get a larger deduction up front, but not feel the pressure to have to spend, to give it away just immediately. And they're pretty flexible, they're very easy to administer. And so something else to think about.
Chris, do you have any insights about any changes in the tax law that may or may not be affecting high net worth individuals or in particular nonprofits in terms of giving that have happened that it would be good to know about, or things that might be coming down the road with the potential of change in government and leadership, state and federal?
Sure. It's hard to predict, just like the weather, what's going to happen with tax policy, but I will, provide a little bit of an update. Some of it maybe is applicable for charity, some maybe just general knowledge. So, I don't know, a lot of people may or may not be aware, but in 2017, there were some pretty big tax changes that took place. If you look back in the history of the tax code, and I won't bore you there, they tend to like to wreck shop on the tax code about every 30 years. So 1956, 1986, and then 2017 is not exactly 30 years. But they did some things on the corporate side. So the Frost banks of the world don't pay 35% tax rate, they pay 21%. So if you're a shareholder of Frost or a large corporation, that's a win. They did some things with foreign earnings that, affected some people more than not, but not maybe large corporations. Those tax changes were made somewhat permanent. They didn't tinker with the individual rates a ton, so, or the brackets. But two of the things that they did that are going to get the most talk about in the next year are two things in particular. Number one, on the estate tax, they took the lifetime exemption. I'm just going to use one person. I used 25 million earlier. That's a husband and wife. But at the time, the exemption was about 5.5 million. So if my mom and dad passed away and their estate was worth $12 million, the first 11 they wouldn't have to pay tax on, but then their estate would have to pay 40% on that extra million. So $400,000 goes to the government. So again, had they chosen to leave $500,000 or $1 million to the Aggie Club, they would have been at 12 million and then they didn't have to pay anything. So, there's a way to get around it. Well, in 2017, they doubled that amount, up to 25 million. So, that's a pretty hefty number where, it's amazing with what's happened in Texas and kind of whether it's the Eagle Ford or the Permian, there's a lot of people that you could think that have the 30, 40 million. So they still have estate planning to be done. But at the end of 2025, that, escalation to 25 million sunsets. And it goes back down to 11 million. It was indexed about 12 million. So you're going to hear a ton about that. Truth be told, 12 million is still a lot of money, but if someone is of higher net worth, I anticipate over the next year and a half, there's going to be tons of gifting and estate planning that's being done. If you need a valuation done on your business, get it done early because a lot of these partnerships are going to get valued. So that's something. And since the tax law sunsets, here's the kicker. Congress doesn't have to do anything. So think about that. They're pretty good at that. Again, not trying to be too political, but they can provide a tax increase. And let's, we tend to have pretty large deficits right now. So I'm going to get a little bit more just outside of my, realm. So our government could probably use some revenue. And so if they have to pass a tax increase, that becomes political suicide. But if they don't do anything and taxes just go up, that's kind of a home run. So I could see that happening. That's going to get a lot of the headlines. But the thing that and again, this goes beyond what would happen with charitable, but the thing I think to keep on your radar, and this is totally not related to philanthropic giving, this is just more tax strategy. One of the other things that I think was a home run, a part of the 17 tax changes, was they had this thing called the qualified business income deduction. And so basically what that is, if you're a small business owner, and I was telling Lane, I consider small business to be small ownership group. You could do $1 billion in revenue, but if you only have 2 or 3 family members that run it, I consider that to be a small business. So Not small in revenue, just small in ownership size. But if you're a business, and let's say your business makes $1 million, well, this qualified business income deduction allows for a 20% deduction on that. So basically, you're only paying tax on $800,000. That's a big deal. You make $1 million, you only pay $100,000. It'd be like, okay, my salary is $150,000, but the first $30,000 I don't have to pay tax on all day. Well, and there's some caveats to certain industries that don't qualify for it. Accountants, financial advisors, physicians. I don't know what we did to make somebody mad, but we did. That said, that sunsets. So if you want to know, I mean, and I just look at most of the business owners that I know in San Antonio fit into that category. They're not C Corps. You could probably count on two hands almost the number of big corporations that are here in San Antonio. But if that also sunsets, and I think that has the potential to affect more business owners than anything else, and nobody's really talking about it. Everybody's talking about the estate tax, but truth be told, the estate tax doesn't raise that much revenue relative to this other. So I think it's going to be very interesting because Congress would have to do something to make that permanent. I wish they would, but instead, a lot of the things you're hearing, well, we're going to drop the corporate tax from 21% to 15%. Go ahead and do that, but give me my qualified business income deduction, because a lot of the businesses in San Antonio aren't C Corps. They're more of the ones that would qualify for the others. So if that happens, it's sort of indirect, but I could see how that could impact, there's a lot of businesses that are our clients that are extremely involved in the community with their time and also just making large donations, and they sponsor events. But if they have to pay tax on that 20%, I mean, that's a pretty good chunk that the business owner or the business might not have. And so, again, I would much rather see the dollars stay in the hands of more private citizens so they can donate to the things they're passionate about, or just, maybe improve their family's life. I mean, who am I to say what you should use your dollars for? But, so those are the two main things that I think are kind of on the horizon to pay attention to. There's some other stuff, but not stuff that I think impact at least folks I know as much. But that is all
We're not hearing because of the people in the news media don't understand it either.
That's a great question. I don't know why more people aren't talking about it. Maybe they just assume it's going to get extended, but it's interesting. It's a conversation, I think, that and I just think a lot of your business clients, like it's something to bring up to them and say, I don't know how to fix it, but sometimes at least if you can see the train coming, you can begin to think about how to get out of the way. Sometimes the train just comes at you so fast you don't know what to do. So it's just something to think about. So if you're working, if you're working for a company and you don't own one, you can maybe, hey, I learned something, boss. Maybe what do we need to do? You can get some brownie points or something like that.
All right.
So.
Thank you, Chris.
You're welcome.
Chris, you pull a number out of here, or ticket out of here.
Pull my dad's phone.
Let's see. Last three digits, 068.
Hi.